जी वेलकम बैक and assalamu alaikum. Today I bring a discuss on the commerce topic, factors affecting the trade, aid to trade. This is the concept of commerce. So basically we discuss that okay, what is the commerce? Commerce include all those activities which are helpful to transfer the finished good from manufacturer to the final consumer. As we discussed in this thing in previous commerce introductory video, that commerce include all those activities that can be helpful from transferring the good from manufacturer to consumer. So after that, get to know about what is trade. Trade is buying and selling of goods. It's called trade. And aids to trade it include all those activities which are helpful to complete the process of the trade. So trade is buying and selling, and aids to trade are factors that can be helpful supporting in completing the process of trade. So type of trade: home trade and foreign trade. Home trade is buying and selling of goods within the country with the help of wholesalers and retailers. So whenever we have to buy and sell goods within the country with the help of wholesalers and retailers, that is called home trade. And foreign trade is that when trade between different countries with the help of exporter and importer, that is called foreign trade or international trade. Now we discuss the aids to trade, factors that can support in trade. So banking, warehousing, transportation, advertisement, communication, and insurance are basically those factors that are helpful in helping in trade. Now we discuss one by one this or few review. So banking, what is the role of banking in trade, and how the banks support the businessman to expand the trade. So banks facilitate trade and production by providing finance, loan and overdraft, by checks, standing orders, direct debiting and credit transfer. We will discuss these terminologies in detail in banking topic in future videos. But right now we just know that okay, what is basic role of banking. Transport. So without transport, it is impossible for the manufacturer to transfer the good from factory to consumer. So you need a fast transport system that can be used to physical transfer of goods from one place to another place. So in international trade, definitely you use sea and ship transport system for import and export purposes. And in home trade, you generally use by road and rail transport method to transferring the good. Next and very important factor that can support the trade, that is called communication. It is very important for the trader to transmit and receive accurate commercial information regarding consumers' demand and different other issues rapidly. So basically, as a manufacturer, if you want to produce a good exactly whatever the customers demand, company need a good effective communication methods that can be transferring the accurate and current customers requirement, and manufacturers generally produce according to that. So we need businessmen generally need a telephone, a letter, teletext, telegram, wireless. Nowadays e-commerce research system, WhatsApp methods are generally used for communication purposes. We will discuss this topic in next video in communication topic. The next pillar of commerce is called insurance. Basically, insurance companies are helpful to compensate the loss of a businessman. As we know that as a businessmen are risk averse. They do not want to take risk. But as we know that okay, without taking the risk, it is impossible that we do anything. So insurance companies can give the benefit to the businessman that if you have faced any type of loss, we are here to compensate your loss. For example, loss of fire, accidental, and there are other type of risks generally involved there. So the benefit of insurance is that now the businessman, after availing the services of insurance, now the businessman take the risk and expand their operations properly. Now the concept is warehousing. How warehouse can support the businessman to increase the concept of trade. Warehouse provides storage facilities for the good. Warehousing thus ensures a constant supply of raw material and finished good in the market. and warehouse helpful to prevent fluctuation in prices. So with the help of warehouse, you generally store the good for future needs, and definitely you know that you have warehouse where you can store the raw material and finished good, and whenever you need it, you can get it and deliver to factory or market according to the stuff. If there is no warehouse available, then the prices are too much higher, but with the help of warehouse, now the goods are available, supply are there, so prices are not fluctuate very fast. Advertising. Advertising promotions techniques generally inform the consumer to remind the consumer about the product and services. And definitely advertising company can build their brand name. Advertising can help you to maintain and extend the market for a particular brand of a good. So basically, through advertisement, you just communicate the consumer about the availability of the good. So after watching the advertisement, consumer go to the market and purchase the good. So these are the factors generally support the businessman to increase the trade. So now I hope you understand what is the role of our aids to trade in commerce. Aids to trade are generally factors that can be helpful to increase the trade. Those factors that can be helpful to transfer the good from manufacturer to consumer, either in shape of advertisement, communication, insurance, banking, and transportation, where you can get the trade has increased on daily basis. Now, reason why the trade has increased. The next concept is that because there is with the help of machinery, latest technology, mass production is there. Due to mass productions, cost will go down, and definitely the buying and selling is concept is increased. Improvement in communication, customer can give can deliver their message to manufacturers properly, that what type of good they need, and manufacturers get the idea from the consumer's requirement, and according to that they have to produce a good. So the trade, buying and selling, either home trade or foreign trade, has increased. And definitely next concept is that fast transport system. Whenever you customer need it, manufacturers supply the good at that time. So fast, with the help of fast transport system, you can get the good quickly. Instead, previously we say that okay, fine, weeks, nowadays in days, in hours, you can get the good. So improve standard of living, people can get have more good job, people have a more salary, according to that they can increase the standard of living and they demand more good, so the trade has increased. International development, international banking system are improved. Now in the case of import or export, the role of international banking system are very good. Now importer and exporter rely on each other on the particular banking system. Now they can give the order easily and quickly. Government put the effort to increase the trade. Government conduct the exhibition in different country for the promotion of the local product, and effort of International Monetary Fund, that IMF generally give the loan to underdeveloped countries, and that the government of the country can definitely use the loan for the country's development. People get job, people's standard of living is higher, people's demand more good. Now the trade has increased, buying and selling is increased on the within the country and outside the country. Now we discuss the barriers to free trade. Free trade is that there is no restriction in trade. For example, tariff, quotas, embargoes, and high exchange rates. These are the tariff in free trade. What is tariff? Tariff are import duties the government has to impose on imported or exported product to protect the domestic product industry. So the purpose of the tax tariff is to protect the home-based country product. Second point is quota. Quota is a physical limitation of movement of goods from one country to another country or one region to another region. Embargoes are complete ban that your country product is not allowed or imported into my country due to different reasons. And high exchange rate is that okay, fine, any due to decrease the import and increase the concept of export. Government have to use this concept, charge higher value of money of the good. When you have to export the good, you decrease the value. So you can supply the uh, export. Whenever you need to, your people of country need to import the good, you increase exchange rate. So people are not willing, not affordability is out of control there, so that's why they will not purchase it. So these are barriers of free trade. Now we'll discuss that, okay, what are the advantages of international trade. So as we know that, okay, we have to import and export the good from other country. That is the concept of international trade. A variety of goods available of services for the local people. Now the important point is that, okay, in which scenario you have to export and import the good. You always export the country's product to other country when one country has enough excessive resources. In that scenario, country export that excessive good to other country at cheaper prices and whatever the price they have to decide. In that way, the balance of payment will be improved. And when you import, when your local country is unable to satisfy local people with the own productions, then you import the good from other country. And definitely, with the help of international trade, increase in specialization is increased, efficiency is increased, uh, competition increase, efficiency is increased, average cost decrease. And definitely there is a creation of good government political link between different countries, because when one country export to other country, then the relationship is a good bond between different countries. Foreign reserve is also higher, because when you export the good, dollars come to your country. It means that, okay, your foreign reserve increase. And when you import the good, definitely in that scenario dollars went out outside your country and your foreign reserve decrease. Import duties, definitely when you import, give the order to for import goods, government can impose duties, and that duties are taxes are basically the revenue for the government, and that revenue country use government use for country development. Now similarities between the home trade and the foreign trade.